Hey, there we go. What's up, guys? Happy Friday, December 17th, 2021. Welcome to the stream. Hope you guys had a good day. Yeah. So this is Obe TA. This is where we apply fundamental technical analysis to the charts, try to find the mythical edge, get an idea of where we are at all times, right? Cool. All right, so I mean, let's just jump right into it, man. All right, I'm gonna keep this one short and sweet. Just take a little account for the health of the market right now. There is some stuff going on. It's not great, but let's take a look at it. Right, we'll dive right in. Let's take a look at Bitcoin. All right, currently got about an hour left until it closes on the day. You are definitely below the valley back here from April 25th, though. All right, so about 47,000. Remember, we keep talking about that. All right, that's the major level of support that we've been trying to hold. And not only have you fallen below the historical support where this arrow is pointing, you're also now below the 200-day moving average. All right, so it's really just kind of a 2-for-1 special on how bad or how bearish, I guess, this could confirm. So, you know, still, especially with something like that, now we have an hour to close, but the 4-hour could give us an indication, right? The 4-hour is holding on for dear life, right? The 4-hour also has an hour to go. So unless you can get this back up in this next hour, above 47 and hold it again, at this point it'd be for the my goodness, 47's up here, right? So 1, 2, 3, 4. This will be the 5th time that you're trying to hold this as support. So I've never heard of the expression 5th time's the charm before, because it probably doesn't exist. All right, so this thing is probably selling off, as we've been saying, down to that 43 level, really into this zone down here. And the reason that we have this drawn out of the zone is if we take a Fibonacci extension, we go from the lowest low back here in July, right? Stop. Take it from your low point, send it to the high. Right, the 618, the golden mean ratio, and then the support back here from February 27th of 2020 on, all right, this deep valley, major inflection point. So just that, you just zone it out, right? You just put this box from the tip of the wick into the 618 of the Fibonacci extension, and that's where it's an area, right? Instead of just looking at one single line, you can give yourself kind of a zone to look for a position to take, all right? It's not always so cut and dry to hit it exactly on the button. So these little zones, especially with areas of confluence like this, if there's two areas that might make sense, right? The 618's a major point of reversal, and then you have that support back there. That's a nice little zone that we could try and see it start to pivot back towards the upside, all right? So below this support, below the 50% retrace, all right, it's probably where you're headed next. So that's where we're going to wait to look for an edge, all right? That's the zone that we're looking for this to go into before taking a position. Now, to boot, to throw on Bitcoin here, you have a descending triangle structure going on. All right, so descending triangle, you have a series of lower highs, essentially with the same low going on here. This base down here at like 46,500. All right, when I say it's touched it 5 different times, you're on your 5th time trying to hold a descending triangle, as I said, bearish, typically price action after a descending triangle. And you might even come back up, right? The closer you get to the apex, the more likely it is to make its move. And more oftentimes than not, it falls out and breaks out to the downside. All right. So just bearish stuff going on here. The negative momentum is just building on the MACD. There's no divergence or anything like that. Even on the daily, you had divergence starting to develop. Right, it was just about to go green, and then it went negative. So this was the day, really, to try and confirm something. And unfortunately, couldn't do it, right? You held the 200-day moving average. You held the support. You had a pretty strong green candle back here on the 14th. Came up and just, tweezer topped before selling off, now down below critical levels, all right? So just not that good, man. You know what? Let's get some snow in here. Make it a little more festive. Nice. All right. So, yeah, man. Again, hour to close. You close below that 200-day. You close below that support. It's probably a fast track down into this zone, all right? And we'll just monitor it then. Because at that point, if we're looking at this to be the next point to get in, this is what we want to see, right? We want to see it come down in here, hold as support, come up, confirm it as support, and then make a higher high, right? And then at that point, start making higher lows. So really, you want to take the trade like right here, all right? After confirmation, let's say we get a Japanese candlestick down there with some Class A bullish divergence or something. All right, that's exactly what we want to see. And if you want, I mean, you could even wait until you get your first higher low right over here before taking a position, as long as you have, I don't know, maybe some hidden bullish divergence or something at that time. But this is the kind of stuff you want to see, all right? You don't want to just buy it as soon as it comes down in here. You want it to come out. Most likely it'll touch prior resistance now on the way back up, maybe the 200-day moving average, come down and then confirm this as support, all right? And then that's where we're looking to see what it looks like here, okay? Divergence, candlestick patterns, all that good stuff down in that level, all right? That's what we want to see. Cool. We'll take a look at the weekly just because, yeah, weekly's kind of gross. I mean, you got 2 days left on it, 2 days and 2 hours, but big bearish engulfing candle. Again, just not good, man. Negative momentum just continuing to build. Not what you want to see if you're expecting a turnaround right now, all right? So, yuck, dude. All right, that's Bitcoin, though. Look for it in the zone. We'll wait to see what it looks like down there, okay? All right, let's move it to Ethereum. So, since the sell-off started, right, back here like November 8th, still outperforming Bitcoin, hasn't sold off as hard. Let's see, you are below this shoulder back here from September 5th, All right, that price is right around like $4,000. So you really want Ethereum to be above $4,000. Below 4,000, again, the only real support you have looking down below is like right here. These two shoulders from September 16th and October 8th, all right, and then the 618 line down there as well. So it could just come down to the golden mean ratio, as well as some support this area, all right, and then same deal. We need to see it do something like this, all right, and then start making higher lows. Okay, so if you want to layer into the position, that's totally fine. On the way down, just dollar cost average, that's cool. But if we're talking about looking for a swing trade opportunity on Ethereum, sometimes you just gotta wait, man. You just gotta wait days to let this stuff develop, considering it's swing trading, right? It's not day trading. We're not working on 30-minute time frames or anything like that. With swing trading, you gotta just be patient, especially, and just let this thing develop over the next few days, all right? So, again, no divergence or anything, just bearish convergence. Nothing good on the weekly, really, either. All right, negative momentum just continuing to build. Same thing on the 4-hour, right? So, I mean, on the 4-hour, you actually have hidden bearish divergence going on, right? So you have a lower high from your high back here, December 12th. And on the MACD and the RSI, you have higher highs. All right. So hidden bearish divergence on a 4-hour time scale. You're back below the 50-day moving average, below 4,000. All right. You got kind of a dragonfly doji. That's exactly what you got, right? This is a very strong candle pattern, actually. This is what's called a dragonfly doji. So you'll have your normal dojis, which just looks something like this, just even. All right, when you get a candle that looks like this, has a really long lower wick, and then comes up and closes out a doji, basically doji just being the same price it opened and closed at, it's called a dragonfly, which is stronger than just a regular doji even. So you have the strongest doji type candle formation going on, but look at the follow through price action, right? It's kind of pathetic. You've come up, you're getting some higher wicks, you got another indecision candle going on here in an hour, below the 50-day moving average, below 4,000, right? After a strong candlestick pattern like this, you want to see it do something like that, right? Make a strong move with a solid body, break up, close above it. It's not doing that, all right? So, yeah, you got the dragonfly, and yeah, you got some positive price action afterwards, but it's just showing indecision at critical levels of resistance, so especially with Bitcoin looking like it's going down, Ethereum's probably going down too. And if Ethereum goes down, really the only level that makes sense are these shoulders back here. So heading down to like 3,600, between like 35 and 3,600, all right? So we will see. All right, the 200-day moving average hanging out down around the 786, all right? That's down around like 3,000, 3,100. So you could even see it get there if it breaks through and Bitcoin continues to sell off. But yeah, as of right now, that green area is most likely where you're going, 34, 3,500. All right. So let's keep it moving here. Let's go ahead and take a look at Tesla real quick. Something that I noticed today, we were in the Discord, and props to Danny here. We were just talking about it or whatever. It just made me do a quick analysis on it. But we were just thinking about what might be good, like longer term investments, given the things with the metaverse and all that kind of stuff. So I thought about Tesla with everything that they've been doing, and I decided to take a look at the monthly, right? There's something pretty scary going on with the monthly here. So let me just break it down what's going on. Essentially what you have on the monthly, all right, now it has 13 days, essentially 14 days, right? 13 days, 22 hours to go. If you are to close something like this, all right, with a big, strong, full body red candle like this, all right, dude, you will have an evening doji star. And you don't just have an evening doji star, you have Class A bearish divergence going on with it. All right, which is really bad. And if you read into Steve Neeson and his Japanese candlestick technique book, he talks about how dojis are much stronger, I guess, after an uptrend. So at the top of price move, at the top of trends, more so than bottoms. So this is just something to look out for even more as far as the context of it. All right, now again, you have 13 days. So if this gets pushed all the way up and closes somewhere up around like $1,100 or something, it's not really that big of a deal. But if this thing continues to sell off, for example, and closes like $900, dude, that you'll have an evening doji star with Class A. You have double Class A on the RSI, bearish divergence, dude. That's really not good. And at that point, as far as the monthly is concerned, now this would take a long time to play out. So over the next coming months, if this does confirm, you're probably heading down to like $500 again. And then from there, you had this straight run up. Dude. I mean, the only real level after that of consolidation that would make sense, I mean, you might pray for your Fibonacci levels to come into play here, but I mean, all the consolidation is down here like $90, $100. That's a little extreme, but with this kind of price going on, then, and all the competitors coming out, Rivian, all those guys, GM, everybody and their mother that owns a Ford, or not a Ford company, but an automaker, is making electric cars, right? They got a lot of competition coming into the space. So, dude, seeing exhaustion with bearish Japanese candlestick patterns is not good, all right? Especially ones this strong. So, and you can even look back, right? And I noticed this one back here from February of 2020. You had a similar kind of thing. You almost had kind of a gravestone doji going on. But an evening doji star after a strong move up, right? But this is what I'm talking about. The candlestick, the third one matters. So this long wick that you got down here, so it came all the way down this $80 essentially before getting bought all the way back up and closing. That shows a different level of strength as far as that candle is concerned. It's not just a full body, it's not just a full red bodied candle. That's the strongest type of candle. The fact that it has this lower wick kind of weakens that pattern. So followed the price action after that in April, got a big bullish engulfing before running. But it also didn't have any bearish divergence at that point, right? It had a higher high on the RSI than the high back here in like December of 2018. This one does have bearish divergence. All right, so don't count on this happening again up here. It's a totally different context. All right, the divergence really makes a big difference as far as the context of this goes. So just saying, man, that's what I mean when you're looking at this kind of stuff. It's like, all right, should I buy Tesla like long term? How's it look? Dude, if it closes this, now I'm gonna wait 13 days because I thought about buying some. I'm gonna wait 13 days to see what this does. And if at the end of 13 days, dude, I'm putting my money somewhere else, because month-wise, this thing could just really reset, sell off. And on a monthly scale, it might not look like much, but from right now down to that level, I mean, we're talking like 42%. All right, I don't want to slowly bleed out 42% back down to levels that make more sense. All right, I'd rather just wait after confirmation of stuff like this to see if it does sell down to that level, and then I'll get it down here. All right, if it makes sense, if it's showing signs of reversal back to the upside down there. All right, but up here, gross. Cool. We're gonna leave that just like that, actually. All right, so really like looking at this one, but AMC popped off today. It was up 19%. All right, let me see here. It actually break out a little bit too, this 4-hour trend line, this supply line that we had going on. So AMC actually doing some things, man. All right, you had Class A bullish divergence going on the RSI. All right, making higher lows with lower lows in price, getting bullish engulfing candles. Playing off of this, I mean, this was when price was going ridiculous back in January with all the Wall Street bet crap, but it did come down and regarded as a level of support, and I'm actually curious. Let me see something. Yeah, I mean, that's way past the 1618 at that point. Might be able to see it better on the daily. Yeah, so nothing to do really with a fib extension on that. But dude, I mean, you had a pretty strong piercing pattern here on December 14th, showing that Class A bullish divergence on the daily as well. All right, so you had it on the 4 hour, that RSI that we looked at, and then you also had waning negative momentum on the daily, and then you got some very strong bullish candles going on. So kind of Class C on the RSI. So you got Class A on the MACD, Class C on the RSI, strong candlesticks going on. I mean, that looks pretty good, man. Weekly starting to paint, I mean, just painted actually a really strong bullish hammer. That's a big bullish hammer on the weekly. All right, and it closed above its 50-day moving average. So it was below, came back up, closed, you know, above it. It opened at it. It's not bad, man. So there could be more upside on AMC for sure. Yeah, you close right at this low back here. All right, this inflection point that you can see, this right here. So I mean, you close right at it, right at the bottom of it, so might be regarding that as some resistance. And you got the 200 and the 50-day right above you with these horizontal resistance lines, so definitely wouldn't buy it right now. You kind of missed the boat on that one. You definitely don't buy an asset up 19% on the day, but what I would say is that if you can get above this, break the 200-day, break the horizontal support, and the 50-day moving average, and then get something like this and confirm them as support, then that's where I'd probably be looking for my next entry on AMC if I were to do it. I don't really like messing with this meme stock crap just because it can get manipulated so hard, but hey man, a lot of people are into this thing, so I'm gonna cover it for you because it had a day, man. It was up 19% on the day. Nice.
Nice.
But yeah, another one that had a really big day today, Avalanche. So Avalanche breaking out. Moving to the 4 hour, we can see a little more clearly here. So had horizontal resistance back here around $102. $100 really was that psychological point that you need to break, right? And you broke the $100. You broke the $100 back here. That was yesterday on the 4 hour chart. And what you needed to do, and I had this drawn up before today happened and everything, you needed to see, actually, you know what? In case you don't believe me here, let me show you. All right, so Avalanche, all right, had it keyed up. That was on December 15th. It's continued to go, getting close to that first target. But essentially, the way that I had that drawn up in my head was that on the 4 hour, what this needed to do. So first it came down, held the 50-day moving average, right? You got a really big bullish engulfing candle, getting you up to the 200-day. You needed to break the 200-day and this horizontal resistance. What you needed from there was to come down and hold it as support before running again. So the trade was really meant to be taken after this bullish engulfing candle on December 17th. All right. Once you got that, then that told me, okay, it's trying to hold this level at $100. Once got back above, you know, the rest is history. But you're back above $100 and you're still showing some pretty strong candles going on. And it's not overbought or anything. You just went positive for the first time since November 26th. All right, so now $100 is support under Avalanche, hopefully, right? The 4 hour is over and has regarded it once now, so now you have $100 below you and the 200-day moving average. Okay, dude. Avalanche is showing some support below it now. So if it comes down and can hold these two, then it's back up to the all-time high, right? $146, $150. So it's something to watch out for Avalanche, but pretty cool to see how breaking that and then holding kind of just confirmed in traders' minds and has pushed it to the levels it's currently at. All right, outperform on the day where most things are selling off. Avalanche is up. Let's go.
Are you not entertained?
All right, let's another notable gainer on the day, Storage. Storage was actually showing this harmonic pattern back here, so this is what is called a bullish crab. So the bullish crab is unique in the sense that it comes to the 1618. Put that on the wick there. Alright, if we use, there we go. Alright, so we're using the bodies here. The 1618 Fibonacci extension, right? The golden retrace. Up to the body. Alright, bullish engulfing candle at that point. I don't know if it had divergence really. Yeah, it had a little bit of Class A divergence as well. Alright, so slightly higher low going on, lower lows, bullish engulfing candle, pattern completion zone of a bullish crab at the 1618 Fibonacci extension. And just so you get an idea of what these look like, all right, and how these are sized up as far as why harmonics have to do with Fibonacci levels, you'll notice that when you do the Fibonacci from the low to the high here, the 1618, right, lines up right down below where that crab extension goes. So harmonics are just extensions of Fibonacci, just patterns that get played out, M shape, W shape, whatever. But yeah, man, came up, held the 50-day moving average before getting another strong session, and it's just continuing to go up, man. On the daily, it had insane amount of hidden bullish divergence, so much lower low. You had that on the MACD and the RSI. All right, so I stand a little bit corrected there. So you technically had, it's pretty much the same low from this low back here November 11th. Technically, it did go below it, but this is still pretty bullish considering the fact that the low was so similar to the one back here November 11th with much higher levels of negative momentum. All right, so at that point, you're waiting for the Japanese candlesticks to come into play and for the negative momentum to start waning off, which it did. All right, got you back above this peak here from October 10th, as well as a point of support back here from April 23rd. All right, and now you're up there testing the 50-day moving average. Break above that. Next stop, you're going to probably have to get above $2. Psychological, if you break 200, then there's really nothing until about $3.50. All right, but you certainly have a range of resistance right here between the 50-day moving average and this horizontal resistance from September 7th. All right, so something to keep in mind, but break that, could continue up, fast track to this level up here at $3.50. All right, cool, and that is Storage. All right, maintaining its trend line back from COVID crash March. So, been an outperformer, man. Storage been performing really well, and it's even more obvious here on the weekly. All right, no bearish divergence or anything. Starting to develop a bit of a hammer after a little bit of selling off. All right, came down, touched the 50-day moving average. So, Storage continuing to look pretty good. Okay. Now, I don't know how it'll hold up if Bitcoin dumps. It has seemingly been defying Bitcoin selling off, so maybe this is one of the ones that really outperforms and actually goes up. But yeah, as of right now, it looks pretty good, man. All right, next stop, $2. Cool.
Okay.
All right, let's take a look here now at YFI. I think probably one of the best performers on the day. Now, YFI is actually a little bit of a head scratcher. It's like you had support back here in the low from December 24th of 2020. Okay. All right. Price did come down December 4th, right? Long lower wick before getting bought back up. So for whatever reason, there were buy orders set up down here. I want to say Maybe some kind of Fibonacci extension. All right, I mean, it just lines up perfectly with the 1618. So, well, actually, let me make sure this is a little bit cleaner here. So it's right around the 1618. Other than that, I mean, once it came back up and came down, I mean, it reacted pretty much perfectly off the 1618 in that regard. And that 1618 being confluent with this peak back, this level back here of 18628. So the candles here were not necessarily strong, right? It's not even really like a morning star or anything, a hammer. You had a star potential and then a hammer going here, so lower wick regarded, and then just craziness, crazy amount of buying. 19% yesterday, today like 31%. All right, so you know, way above the 50-day moving average at that point. I don't know if you're above. I mean, you're above this inflection point back here. It's kind of ahead of somewhat of a head and shoulders pattern from 2020. But certainly above that right now. So that could definitely be an area that would be regarded as support, considering you also had this valley from March 24th. So it's pretty good. Now, is it the time to buy it? Absolutely not. Okay. You rejected off the 200-day moving average seemingly so far. You have 39 days. Didn't get it above the 200-day moving average. Did get it above the 50, and you did get it above this horizontal resistance back here from December 2nd. But you're getting pretty close to overbought territory, and just oftentimes after markups like this, 30%, technically 49%, 50% in the course of 2 days, people are going to be taking some profits. You'll probably come back down below that, and you know, I don't know if you're going to keep holding the 50-day moving average at that point. This thing could really kind of sell off down back into these supports from June and July. So that is more of where I would look to maybe get in there, but hey, if you had it, congrats. You did have, let's see. Yeah, I mean, this bullish engulfing candle back here from the 15th was a pretty good sign. That being at the 1618 of that daily Fibonacci extension. So, I mean, there were some signals there. I didn't pick them up. I didn't see it. But, yeah, I mean, even some class, what's that class? It's not even class. It's not even bullish divergence on the RSI. So, I mean, that's the thing, man. Sometimes this just happens with assets. All right, they don't always show beautiful symbols before popping off, especially in crypto. Sometimes they just go nuts. Sure, you had like a bullish engulfing candle. It's at the 1618 and stuff like that. Yeah, but I didn't see enough really to take the position on this. No divergence or anything. Maybe a little. I mean, from December 10th to this period, from December 13th, sure, was showing some divergence. It's close, so the class C almost on the RSI. So I guess, right? That bullish engulfing was a good signal. So if you're in on YFI, man, I mean, congrats. Enjoy your 50% over the last couple days. But yeah. Let's move it over to the S&P 500, considering it was down 1% on the day. Came down, touched the 50-day moving average before closing above it. So trying to hold on to the 50-day moving average. The weekly, though, you just closed out the week. It's dark cloud cover. All right. Bearish dark cloud cover after this. You had on the last weekly session up almost 4%. I mean, you basically wiped out these two major red candles. A very strong bullish move just to be followed up with some dark cloud cover. That's just kind of gross. And if anything, the S&P 500 is almost showing kind of like a double top here. All right, so it's kind of like double topping out. Double topping out, same high in price with lower highs on the oscillators, dude. So just class B bearish divergence. All right, it's just kind of gross, dude. Dark cloud cover. Yeah, I mean, you fall below the 50-day moving average. I mean, the next stop for support is at $4,546. So, again, it's not like, I mean, if you've got, the thing with this is like most retirement portfolios made up of this stuff, all right? So I understand if we're in the crypto world, we don't really care. I mean, you care if you care about the market overall, because this gives an indication into the, the U.S. economy. So if it's selling off and bearish and looking bad, look like it's going to reverse, then a lot of companies that you're in are probably primed up to sell off as well. The major run might be over. Probably not. They might also just turn the printers back on and get it back going, right? It doesn't sound like the Fed's going to do that. They're going to let rates start to increase and stuff. So maybe this is it, man. Maybe this is the top. And if you invert it, all right, you're doing some double bottom kind of stuff. So I mean, we'll see, dude, but kind of gross. We'll keep an eye on it, though. Of course, I mean, obviously. You only hear about the S&P 500 every day, all the time. Every tick is measured with, bated breath. But, yeah, dude, that's going to do it for me. I'm keeping this one short. I got some stuff to do tonight. Got some plans. I got to go sell a Mac computer to some guy in a parking lot. Hopefully I don't get stabbed or something. Might become a real knife fight. Shouldn't say that. Speak it into existence, right? But, yeah, man, that's going to do it. Let's move it back to Bitcoin, see if it's doing anything better. Not really. Yeah, weekly is gross. You have 2 days, but like 33 minutes before you close below the 200-day moving average. And historical 47,000 in support, man. Not good. It is just not good. All right, another thing you're going to want to see to show potential for a reversal, all right, is breaking this trend line on the RSI. So just write that down as well, okay? We need to see some Japanese candlesticks, some bullish divergence. We want to break the trend line on the RSI, preferably on the back test here of support, all right? Get all that stuff down here. The conversation can switch back to, okay, maybe this is the bottom and we're heading back up. But till then, your boy ain't sold. All right. That's going to do it, though, guys. All right. So I appreciate anybody that tuned in live, checked it out. Thank you very much. If you're watching this later, do me a favor, hit the like button, the subscribe button. Go ahead and jump into the Discord, the Instagram, Twitter. Join all that stuff, man. Just trying to get the message out, all right? Just trying to help people become a little more learned, all right? This is all free. I don't have any courses or books or anything to sell you guys. It's just trying to teach some fundamental technical analysis, man. Trying to meet like-minded people so I can not be doing this stuff by myself. And I feel like I have something to share with the world, man. This is what I like to do. It's kind of like my hobby, right? So, yeah, go ahead, jump in that stuff if you're interested in trading. If you just want to see progression and trade setups and all that kind of stuff, that's fine too. But, dude, I'm a super open guy, man. Just message me, DM me, whatever you want to do, and I'll be more than happy to help you out, all right? But that's going to do it. All right, so I hope you guys have a good Friday night, a good weekend. I'll probably be back. I'll probably do one on Sunday. Just a quick one, might be midday or whatever, but I'll go ahead and throw that alert out in the Discord and stuff so you'll know. But, yeah, appreciate you stopping by. Like button, sub, follow the stuff, and remember to always keep it technical. Our place.